story this evening. The RBI has announced a record annual dividend of 2.11 lakh crore rupees for the government. This is more than double of the 87,000 crores it paid last year. The central bank has also raised the contingency risk buffer from 5.5% in FY19 to 6.5% in FY24. Bonanza coming in for the central government. Ritu standing by with more details, and Sapna on the implications for the government's borrowing program as well. But Ritu, to you first. Big one coming in from the RBI.
Well, bonanza it is, Shireen. Massive dividend payout of 2,10,874 crores from the Reserve Bank of India to the central government for FY24, possibly the highest such dividend payout ever, and a 140% increase from what we saw in FY23, where the surplus transfer was 87,416 crore rupees. Now, economists on the street we've been speaking to were expecting a dividend transfer of anywhere between 80,000 to 1 lakh crores, or slightly higher thereabouts, but this figure far surpasses that, coming in at double the expected amount. We're calling a dividend for FY25 because the transfer from RBI is for FY24, but it is going to reflect in the government's accounts only for FY25. Now, this big increase, much higher than expected, is likely on the back of our expected higher interest income that the RBI has booked from foreign securities or its bond holdings. There was an expected sharp rise in interest that RBI earns from its foreign exchange assets. That in turn could be attributed to the rate hikes that we've seen the US Federal Reserve undertake in the last 2 years. We have to, of course, wait for the RBI annual report for more details, but clearly RBI's earnings from forex assets would have been very high to drive this kind of a high surplus transfer. Now, in addition, the Reserve Bank of India has also decided to increase the contingency risk buffer to 6.5% of the balance sheet from 6% in FY23 and about 5.5% we saw during COVID years to support growth and economic activity overall. This is, of course, at the upper limit of RBI's 5.5% to 6.5% range. Now, keep in mind, the government had budgeted 1.02 lakh crores as dividend from RBI and state-owned lenders for FY25, and this is a massive amount coming in that is going to support the government's liquidity surplus and expenditure going forward, although the expenditure itself is only expected to pick up after elections.
Well, yes, you're right in pointing that out. What was budgeted was 1.02 lakh crore rupees, and what has been delivered by way of this dividend bonanza by the Reserve Bank is 2.11 lakh crore rupees. So exactly the point that you were making, Ritu. Let's go across to Sapna now. Sapna, how